Prime Minister, for coming down. That was very interesting. We've got lots more incredibly interesting talks coming up. Yesterday, I lost, these are my wife's woolly jumpers, and I lost one of these somewhere on the venue. So if anybody managed to pick up a very heavy Aaron sweater somewhere in the RDS, I'd be very grateful if they might return it by the end of today, so I don't get in a lot of trouble when I go home. Next up, we have a quite remarkable individual. He's built a $4 billion personal finance startup with over 75 million customers. That, of course, is Credit Karma. He's going to come on stage and talk about how customers are going to become more empowered than ever before. Please put your hands together for the CEO and co-founder of Credit Karma, Kenneth Lin.
Hello and welcome. I'm Kenneth Lin, founder and CEO of Credit Karma. Today I'm going to talk a little bit about the inevitable rise of autonomous finance. So I think that is a change that is coming, and it's a little bit of a vision, I think, of the future of what everyone in this room is building and working towards. So before I begin, I just want to talk a little bit about Credit Karma just to set a little bit of the stage about the company and the data and the way that we operate. So I founded Credit Karma a little bit more than 10 years ago with a mission to make financial progress possible for everyone. Turns out 2007 wasn't the best time to start a financial services company, but we persevered and somehow we're on stage talking in front of you, right? So to give you just a quick high level, Credit Karma is founded in the United States. We have a little bit more than 80 million members in the United States. We have about 1 in 2 millennials on the Credit Karma platform. And to date, we've facilitated more than $40 billion worth of financial services products, credit lines specifically, and over 20 million users in the United States have used Credit Karma to help find a financial services product. So, enough about Credit Karma. I want to talk a little bit about the direction and the changes that we see in the ecosystem around finance, around machine learning. So first, if you take a look at the industry, it's changed quite a bit, right? There are a lot of names on the screen, there are a lot of brands, and a lot of people in this room who are thinking about the next generation of fintech and where the industry is going. We've seen some amazing companies, we've seen some amazing products and changes, but I would argue that the speed of innovation in financial services is actually not as fast as, say, our missions to the moon or e-commerce. So we think there's a lot of opportunity in this space. With that said, we see adoption is strong. So in the United States, about 33% of people have used a fintech-oriented service. That's twice as what it's been over the last couple of years. And what we see is a proliferation or a preponderance of that is within payments. But we see actually far less adoption in savings apps. You see far less adoption in financial planning and budgeting ops. And when we look at this globally, what we see is, the United States is kind of in the middle of the pack, and you certainly see the adoption rates in China, in India, and UK are actually leading the way. So we think that there is a real opportunity here to really think about, well, where do all these points converge, and what are the opportunities that are missing from the product and the ecosystem themselves? So with all this innovation, my observation is that technology has made fintech more digital, right? It's converted the dollars in your pocket, the pounds, the euros in your pocket into a digital wallet, into a digital currency. But at the end of the day, the consumer benefit is actually relatively limited when you think about that, right? Moving dollars to a digital format makes it easier to spend, but I'm not sure it really solves a lot of the problems in the ecosystem. So we took a bit of a survey and a bunch of research, and what we find is that 46% of consumers are still overwhelmed when it comes to finance. And this is in an age where so many problems have been solved through technology. We think that's certainly a problem. When you take a look at the fact that 29% of millennials feel ashamed about their financial situation, again, goes to the testament that while we have made great progress in financial services and fintech, a majority of consumers still feel like they don't have the avenues and the help that they need to get ahead. And when you look at it, most consumers today actually think a lot about the fact that, the banks and financial services companies are set up to serve the wealthy, right? Not the millennial generation, not the people who are, the next generation of consumers. And we think this is really one of the challenges in the space when you think about the fact that all this great product, all these great minds are solving problems, but they're not solving the root of the problem for many consumers, right? And then lastly, I'll leave you this note. So the median income in the United States is about $50,000 a year. Well, when you take a look at that base, a full 28% of consumers in the United States have no money at the end of the month, right? They're living paycheck to paycheck. And that, again, is in a country where the median income is $50,000 a year. A full 40% of Americans actually don't have $500 in savings, right? So you think about, again, all of the great leaps forward in all the verticals that have been disrupted through data, through internet, through technology, and we have these crazy stats when we think about what consumers have at the end of the month and the opportunities for them to get ahead in this space. So this is where we think there is a really big issue around spending habits. This is really the complexity of the ecosystem leads to all these fundamental problems that we see in finance, right? And let me walk you through a very simple diagram that illustrates all of the challenges that we see in the space. So I'm going to take a little time to explain this because I think it's one of the more powerful slides that we have. It's very data-oriented. So each one of these dots represents a random Credit Karma user, right? And what we did was we took a look at all auto loans that originated in 2017. These are all 6-year loans. And we controlled both the credit quality of each consumer on the x-axis, and we looked at the APR, or the interest rate of that auto loan, on the y-axis. And what you can see very quickly is that, and this is on the U.S. credit system scoring system, so 800 is super prime, 450 would be deep subprime. And what you know very quickly is that there is wide dispersion of interest rates sort of in the middle of the band, and the median credit score in the U.S. is approximately 660. So very quickly what you see is that the financial services marketplace is actually relatively inefficient, right? A full 80% of consumers, for example, when they go buy a car, only speak to the financing arm of that dealership. They don't go shop. And as a result, you get this type of chart, where some consumers are paying 25% interest and other consumers are paying 10% interest with the same credit risk, right? And that, again, is a function of the lack of transparency, the lack of education in the space. And we think that's a real problem because if you just do the simple math on this chart, you'll see that Americans are actually paying about $37 billion more than they need to on their auto loans, right? And I think that is an opportunity for everyone in this room. That is an opportunity. That is a definition of what fintech can change over time. So we're really excited about, how technology can play its role in making a difference in this particular space. So that's the context by which we see, right? Most of the information that we have had, most of the data plays has really been about digitalization of currency. It's been about money movement. It hasn't been about how do you make consumers more educated, more literate around their financial services products. So that's how we come to this conclusion that we think that there will be an inevitable rise of what we call autonomous finance, right? The way that we think about it is the same way that autonomous vehicles will be able to drive you, from San Francisco to Los Angeles without any user input. We think that there is an analog in financial services. And let me walk you through the data that we have and walk you through the way that we think the world comes together in this space. So first is, just like in autonomous vehicles, it's hugely driven by data, right? So one of the things that you hear about autonomous driving is the fact that Google and all these companies are out there collecting the information on not just the roads, but the algorithms to determine what is a pedestrian, what is a car, what does it mean to move on the highway versus what does it mean to move in the city. And I think those same analogs exist when it comes to autonomous finance, right? It's not just about your credit score. It's not just about your ability to pay. It's about all the other attributes that actually determine whether that is the right product for you. And this is in a landscape where there are literally tens of thousands of financial services products. So we named a few, fraud scores, propensity score, tax information, cash flow, and so on. So there's a lot of information that is actually necessary to actually make autonomous finance happen. Next, when we think about just the pure number of attributes per user. So at Credit Karma, we capture something like 2,600 attributes per member. And there's a time series that goes on. And each day, Credit Karma makes about 8 billion predictions on our platform about what are the right products, who should we recommend, or what products should we recommend to whom. All these things are actually quite complicated. We have data scientists from NASA trying to solve this problem, right? We're using cloud computing, we're using AI and machine learning, because it's not as straightforward. It's not a straight optimization because there's actually quite a bit of nuance that goes into it. Here's one of the primary problems that we see that you need to solve. And I think most people are not aware or tuned into these types of problems because you're investors, you're entrepreneurs, you're engineers. You're actually not necessarily at the forefront of the challenges of, I would say, everyday consumers. So what's fascinating to me is that a full 81% of subprime credit card applications are rejected, right? And the white space in every one of these particular charts is really the rejection rate. So think about this, right? We have companies planning missions to Mars. We have cars that are about to drive themselves. And the majority of consumers, at least in the subprime space, are actually being declined for a loan product, right? And that, I think, is incongruent. And I think that is representative of my note around there's been fantastic innovation, but at the same time, they're solving the money movement problem and not necessarily the problems of how do you get to, how do you sort of build your credit, how do you get to savings, and how do you make yourself financially stable over the course of your lifetime. Here's a little bit more of the data that we see in this space, right? Which is one, less than 25% of millennials are financially literate, right? And obviously with more age, with more experience, you become smarter about your finances. But the reality is that we just don't have the tools anymore. We don't talk to consumers in a meaningful way that really educates them on this space, which is getting more and more complex, right? Because when you think about finances, the same tools that I'm talking about developing in autonomous finance, banks are using, right? So for us as a consumer to understand the AI algorithms or really the complex machine learning prototypes that are being used by large financial institutions to manage risk, we're asking the typical consumer to understand those pieces. And I would argue that that is incongruent, right? That is not going to happen. So what you need is actually a consumer-oriented system that understands that dynamic of the ecosystem, right? So that, I think, is an important context. And when you think about what do consumers really want, our data shows that millennials in particular want a technology to help them make better financial services decisions, right? Which makes sense, right? Millennials are so used to having a phone that is great for communication, having a phone that helps them travel, having a phone that helps them with just about every aspect of their lives, with the exception of finance, right? Again, I think this is the one that we have not been as innovative as we can be in this particular space. And then lastly, in addition to making the recommendations, a full 62% fully believe that, recommendations generated on AI is a way that, that they believe their finances go in the future. And again, I think that makes sense, right? If you never had to hail a taxi before and you've only known rideshare, right, you're going to expect a similar type of convenience when it comes to things like your savings account, thinking about retirement, applying for a loan product, right? The idea that you would actually have to go to a website that gives you, 10 ideas, none of which are actually your actual rate, none of which will actually give you a real sense of what your likelihood of being approved for, and filling out the same exact questions 5 times, 10 times. I mean, think about how archaic that model is relative to all the great other innovations that we've seen over the last 5 or 10 years when it comes specifically to internet and data. All right? So what I'm left with is this idea that over half of millennials would really trust this idea of artificial intelligence to automate their finances, right? And, we think that's a pretty powerful idea. And here's a little context, right? So when you take a look at millennials, and we actually polled our users, or actually it's not our users, it's a generalized poll, and understanding what do people feel comfortable with, right? And I think by and large, everyone's comfortable with mapping software, whether that's Google Maps or something else. I think smart speakers and being able to interact over voice, everyone's very comfortable. Self-driving cars, right? People are comfortable with. But it's interesting to me that there are more people who are actually comfortable with the idea of machine determining how to pay your bills, what loan products you should have, how to save for your future retirement. And that makes sense, right? I mean, this is math in many ways, right? There is very little art in here, quite candidly. And when you take a look, again, at the next generation of millennials and consumers, these are areas where they think that, this is where the world is going and where their comfort levels are. So when we put all these pieces together, we think that the impact is actually going to be quite huge. So Going back to this note around auto loans, there's $37 billion worth of savings. Americans who have personal loans, our analysis shows that they're actually overpaying by $200, right? So again, each one of these are quite factual, quite empirical, right? You just bring all of the, you bring all of the loan products to the mean, and you get to this place where people who are overpaying no longer have those inefficiencies in the marketplace. When you take a look at mortgage, right, over $1 billion a year in mortgage savings. If people knew when they should refinance, if we could simplify the processes by which that happens. So those are all the key pieces in here, and when we put all these things together, what we get is this inevitable rise of autonomous finance, right? Which really, I think, can really transform how, I would argue, economies work, right? Our math says that in the US alone, if we were able to get the markets, financial services markets, to be efficient, we would put about 1% back, 1% of the US GDP back into the ecosystem, right? So that's 1% of GDP that's not being paid on interest. That's 1% of GDP that helps that consumer have more than $500 in savings. And when you think about income inequality, it's really poor, or it's really expensive to be poor, at least in the United States, and I would argue elsewhere, right? All of a sudden, you realize that the lines to cash your check are an hour long, right? And that's an hour that you're missing out on work, right? And what you realize is that it's 5, 6, 7, 8, 9% to cash your check, whereas it's free if you're not poor, right? And what we see is that the more that you can actually automate and the more you can actually add technology, the more you can actually pull those groups back together and have less of that, dispersion that I think creates a lot of, I would argue, the nationalism and at times sort of the non-globalization that I think is an important way for the world to grow together. So that really is, the key here is that by doing this, we get much more efficient marketplaces and we actually give everyone else a voice, right? The 1% have really great financial advisors, and through autonomous finance, we can actually give the 99% the same fantastic, mentorship, advisory products as everyone else, and I think that's an important aspect here. So I close by saying, almost half of millennials are ready to make this transition, right? And what's fascinating to me is that historically it was the banks that actually had all the trust, right? You literally had all your money. You had to trust those companies the most. But more and more what we see is that, particularly with millennials, they trust the technology companies, right? They trust the Amazons of the world. They trust the Googles of the world much more than they do the banks. And I think the banks haven't done themselves a service, right? They've shot themselves in the foot, whether it was opening accounts and scandals with that, whether it was not protecting the privacy and the information of their user base. All of these things have led to the erosion of trust in banks, and really the confidence that technology companies are the ones that are going to solve it for the next generation. So, in closing, when you take a look at all of these pieces together, what I would argue is that there has been fantastic progress in many fronts, right? And when you take a look at, the services that consumers find to be essential, Google for information and search, Amazon for e-commerce, I think there's a real opportunity for the people in this room to build something that actually makes this list in terms of how do we build something that is so essential from a financial services product perspective that you can't live without it. And I think that, again, is the context. I think that people are ready. I think there is a very real problem in this space in the sense that, people still are confused about it. And I think the answer is all staring at us, right? It's the AI, it's the cloud compute, it's all the things that we are working on at scale that make a difference. And I would encourage you to have more conversations about it and go and solve problems around what are the things that are keeping consumers up at night, what are the things that are challenging families across the world from making financial progress. So, Kenneth Linden, thank you very much.